You ask what is the base currency? So when we talk about FX pair, so let's say pound US dollar. So when we talk about FX pair, I'll now teach you how to read it. So you always see on the news, 1 point something or what. So what does it mean? Okay, when we're talking about FX pair like pound USD, if you were to buy this pair, that means you are buying the base currency, which is the currency on the left, and you are selling the currency on the right. So you're buying pounds, selling US dollar, or you are exchanging US dollar for British pounds. So when you buy a currency pair, there is two actions happening. One is you're buying, and the other one you're selling, or you're converting the one you're selling into the one you're buying. So that is something to take note. And so when you go to the money changer, let's say I have Sing, I want to change for USD. So I'm buying USD, selling Sing. So you can do it like that. So we have an example. So here is about how it's quoted. So when we say that British pound USD is 1.3, what does this mean, right? Is that one British pound or the one base currency can exchange for how many term currency or the currency on the right. So if we say 1.3 means 1 pound can change for 1.3 US dollar. So if the currency go up, so 1.45, 1.3 go to 1.45, it means that your British pound has went up in value in terms of US dollar. So for every pound, now you can exchange for more US dollar, which is a good thing like if you bought pounds. Then the profit and loss will be reflected in the term currency and the currency on the right. So let's say you buy at 1.3, you sell at 1.45, so you make 0.15 for every pound you make 0.15 US dollar. That's how FX is quoted. How FX when you talk about P&L is always quoted in the term currency. So now, this is the question I get a lot. My friends and colleagues will be like, "Hey, I want to go holiday." Then, I see this. I don't know what the hell is going on. So they ask me, "Hey, which number is what?" So very simple. Okay, if you were going to buy, let's say you want to buy US dollar, okay, the one on top. So simple. If you're buying, that means you want to sell Sing to go buy US dollar. You will need to pay 1.359 Sing for 1 US dollar. But if you're US dollar, you want to convert to Sing, then it's the currency on the left. Because they are buying, the money changer is buying your US dollar at 1.333. So the difference between what the money changer is selling and what the money changer is buying is what we call the bid-ask spread. So now we'll be talking about a little bit about the terminology about or measurements in FX. So in FX, you'll hear people keep saying about something called pip, something called points. All this finance jargon. Actually, it's very simple. Okay. So for a pip, it used to be the smallest point in the FX. Used to be. Now, with technology and things getting competitive, now they have actually went down below pips. That's why the points exist. So now, I give you an example lah. So for let's say a JPY pair, Japanese yen pair. So let's use a US dollar Japan yen. Okay, so this is a very popular pair. It's traded a lot, and one of the reasons why it's traded a lot because both currencies are the go-to currency for trade. So the pip, when we talk about one pip for a Japanese yen, is the second decimal place. Then for all other pairs that don't have Japanese yen will be the fourth decimal place. So if we see our USD JPY FXCFD, we have the bid. Let's keep it simple. The bid is at 148.850, which means that the the pip is 0. The 5 at the 5 digit space. So this is if this movement is 1 cent of yen, then it's called considered one pip. But the minimum movement is zero point 0.1 pip, which is the third decimal place. So that's what we call be it points or some the proper term is pipette. But it sounds too cheap lah. So usually we just call it point. So one pip movement for is $1 movement for a mini contract size. So if you are buying contract size of 10,000 base currency, then if the price moved by one pip, you made or lost $1. So it's something so that people can rationalize. Oh, I earn 50 pips. Oh, then 50 pips. My contract size is 10,000. I earn $50. So it's easier for people to rationalize and know how much the pip movements and all. So it's just a terminology lah. Then for points, it's just 1 point movement is basically the minimum lah, which is 0.1 pips. Yes. So 100 pip movement will equals to 1,000 points. So depends. Some people like to use points, some people like to use pips. For FX, pips is more popular when they describe the movement of let's say when there's a big movement, then they will say in terms of pips. Okay, next. Remember we talk about the difference between the money exchange buy and what the money exchange is willing to sell. This is what we call the bid ask spread. So of course, as a money exchange, their bid ask spread is very fat because that's their business. They dealing with hard currency. They have to hold the currency because when you go there and you hit and you buy with the quoted price, they have to give you the currency lah. Of course, unless they run out lah. But that one is hard currency, so their spreads are very wide. While as for when we talk about trading, the lower the spread, the better. So if you're using our Poems app or our Poems web, if you were to have a trade window for our FX CFD, we even help you calculate the spread. The spread is in pips, and it's the difference between the ask and the bid, or the bid and the ask. Same thing. So the difference between these two number, if you can see, right, is the fifth decimal place, which is a fractional pip, and is 0.3 pips. Therefore, the spread is 0.3, which means that if you were to buy and sell at the same time, you pay 0.3 pips of spread, or that's your cost of trading. Because FX has no commissions, zero commissions. So you can trade as much as you want, you will not incur any commission. This is almost industry wide. Almost. Later I'll tell you why it's almost and not 100%. So first thing first, for FX CFDs, there is no commissions and there is no finance charge. Okay. So first thing first, no commissions, but there is spread. So yes, there's still a cost to trading, but it's not in the terms of commissions. So if yes, so why I say not 100%, because some brokers, other brokers, they will flip it. So they will have no spreads but have commission. So it's either or lah. So either ways, there is some cost to trading, just whether you like it in the form of commissions or in the form of spreads. So there's no such thing as no commission, no spreads. Then I would like to trade there also. But there's no such thing. Because in the end, they are liquidity provider. They need to earn a bit. Because the spreads are so low, right? Actually, the transactional cost of trading FX is one of the, if not the lowest in all the products. And they are one of the most competitive. So what determines the spreads? So here we got two pairs. One is Euro USD, which is one of the most popular pairs. Then there is New Zealand Sing, which is a what we call an exotic pair, which means that it's a pair that doesn't go through US dollar or is not one of the top traded currencies. Like Singapore is not top traded currency because we are quite small and not everyone wants Singapore dollars. While as everyone wants US dollar, euros, Japanese yen, and so on. So because of this, New Zealand dollar SGD has a higher spread. So this is something to take note. And so liquidity is one of the reasons why the spreads can be wider or thinner. So, of course, if the liquidity is high, then spreads are low. But if liquidity is low, then spreads are high or higher lah. Yes. So on top of that, there's also different timing. So if you were to trade on Monday morning at 5 a.m., because during the when the market just opened, usually the spreads are very high because liquidity is low during those hours. So that is something can be observed. And so if you are going to trade, try and avoid trading at those timing because number one, spreads are higher and also liquidity is lower and usually there's not much movement. So next, we'll be talking about something called cross pairs. So in FX, if you realize, right, when we compare two currencies, is one, let's say AUD USD is one AUD can exchange for how many USD? Then let's say we want to create a pair called AUD SGD. So actually, we can go through US dollar, and from US dollar we convert it back to Sing to come up with, to create the AUD SGD pair. So if we were to convert, so let's say we want USD. So we got AUD, we want USD. So we will hit the sell. Then we will receive, so one AUD, we receive 0.6217 USD. Then we use this USD to convert into SGD. So 0.6217 can convert into how many SGD? Then we will need to divide of times. Then we actually realize that, oh, AUD, when you do this way, you can create the pair and the pair is 0.83818. So it's very similar to the one that we provide as well. So if you can never see the pair that you want, you can actually create your own. So that's very unique to FX because you're dealing with currencies and currencies are the same. So, you can convert to other currencies. Okay, so remember we talk about there's no commissions and no finance charge. So, but there is spreads and there is what we call swap points. So swap point is very unique to FX because usually only FX does this. So when you hold a FX position overnight, you will gain or lose swap points. So as you know, different currencies have different interest rates. So let's say Singapore, you have SORA. Let's say US dollar, you have the Fed fund rate. Hong Kong got HIBOR, for example. So different currency have different interest rates. So if you were to buy a currency and sell a different currency, so let's say you buy US dollar, you sell Japanese yen. So you gain US dollar interest, but you pay Japanese yen interest. And because of this, you can actually earn. It's a strategy for people or traders or even investors to buy currency with high interest rates and short currency or to sell currency of the low interest rates. From there, they can able to gain positive swap points on a daily basis. So of course, the opposite is true lah. If you went to buy Japanese yen and sell US dollar, then you have to pay US dollar interest and receive Japanese yen interest. And if you know, Japanese yen interest famously very low to zero. Currently, they are about 0.5%, which is considered 17-year high. Last time they had this level was quite a while back. They have been having zero interest rate or even negative interest rates for Japanese yen. While US dollar, as you know, later we have charts to show the trend of the US dollar interest rate. So here is a example of how much swap points people can earn. So if you were to buy one lot, so this is an actual real example, buy one lot of US dollar JPY on 15th July 2025, and you hold it to 16, so you hold one day only. The total swap points you have make is 98 yen. Because remember, the P&L are all calculated in the term currency or the currency on the right. So yes, you bought US dollar Japan JPY, the profit and loss and also the swap points will be in Japanese yen. So assuming the $1 is 148 yen, so you'll get about 66 US dollar per day lah. Assuming that this is true for, like, let's say the swap points didn't change. Swap points change every day, slightly here and there, especially due to interest rate uh, fluctuations, especially the short term one. On top of that, we also assume that the $1 equals to 148 yen does not appreciate or depreciate. Then, because the contract is for 10,000 US dollar, but you only need 5% margin. Because of this, you only need to hold 500 US dollar in your account. And because of this, 500 US dollar, you can generate about 0.66 US dollar per day. In 1 year, if you hold it for 1 year, you can you can actually get quite a huge return. You get $240.90 US dollar. Swap points. Haven't count if you make money if the currency pair appreciate as well. So the famous one is during 2023 when the Fed was increasing interest rates and aggressively to combat inflation, and the Japanese yen was getting devalued due to interest rate differential and also the weakness in Japan economy. Then wow, if you have bought, then you have both earned the swap points, which is around these numbers, and also the capital gains, because Japanese yen from like 110 yen per dollar all the way depreciate all the way to 140, even 150 yen per dollar, which was quite insane. So yes. So next we'll talk about how to pick which pair to trade. So some people, even my close friends, ask, so they want to trade FX. Okay, so they already decided, hey, I want to try. I did my research, I know what's going on, so I want to try. Then the next question is which pair? There's so many pairs. So there's like, we offer 36 pairs, but there are a lot more pairs. So my advice is, first, don't talk about cost or this stuff first. First thing is comfort and familiarity. So what are you familiar with and what are you passionate about? So just because a currency, you don't deal with it on a daily basis, because obviously in Singapore we deal with Singapore dollar. But we don't deal with, let's say, US dollar JPY, for example, or Euro US. So those are the most popular pairs because they are the most traded currency. But if they are not in your comfort zone, let's say for me, I personally do not know much about the Euro market. So I will not pick Euro USD because I don't know, or there's so many things. We only can prioritize certain pairs that you like. For me personally, I like US dollar JPY. So because I like it, I will do more research. And because I do more research, I will be more informed about what's going on in those two markets instead of so that's for me. So I went to Australia to study. So during that time when I was in Australia, I was looking at Aussie US dollar. Then I also learned how their pair works. So first thing first is your familiarity and your comfort zone. So stick with it. It's okay to pick pairs that are higher in cost if you are more familiar with it. So I will always advise people to pick your comfort zone, within a comfort zone, and don't just pick what is popular. So then, of course, after you pick what is your comfort zone, then you can look at the cost, which is the bid ask spread. So here on the chart on the right, you can see on the table on the right, we can see the lowest obviously is the one at the top, like your Aussie US, your Euro US, your USD JPY. Then as it goes lower, it gets more and more, the spreads get a bit wider because first it's an exotic pair, and if it doesn't go through USD, generally the spreads are fatter. Then timing of when you want to trade. So this is something we'll cover in the next few slides. So timing is not whether when to enter or exit. So that one is, of course, you need to know that. Timing as in when do you want to trade. So do you want to trade now? Do you want to trade 2 a.m. in the morning? Do you want to trade afternoon? So this matters. fourth is swap points. So of course, if you're gonna trade a pair and you're gonna hold position long term, swap points eat into your profit or it can enhance your profit. So that's something to take note of, especially if you are planning to hold FX positions. Okay, so which pair to trade? So of course, these are the popular pairs that we have shortlisted. So there's Euro USD. So the main themes along around this is comparing the data between Euro and US, be it from the different central bank ECB versus the Fed, or their economy GDP, and so on. So this is one of the most famous pair, and the peak time to trade is the UK session, which is between about 3 to 7 p.m. Reason is usually during those time is when most amount of people trading, and most likely news are like more likely to be released then. So if your hot trading period is around then you might want to look at Euro USD. For USD JPY, then we have the peak period is around 7 a.m. to 10 a.m. and 3 to 5 p.m. So these are usually fluctuate lah. So it depends on when do you want to trade and what do you like to trade. Okay, then there's pound, Aussie, and so on. So of course, we'll talk more about the main theme section. Here is just a table lah. So at least you know roughly what we're looking at. Especially for Sing, obviously, we're looking at both the MAS and their policies and also the US as well. Okay, actually, I have a question from a anonymous attendee. What is the difference to trade USD EUR or EUR USD? Okay, they are the same thing in terms of you are still dealing with the same two currencies. Just that how is it quoted? Is it quoted in terms of one USD is how many euro, or one euro is how many USD? So if there's no difference, so it's just a flipped version of the curve. So it depends. Some people they like to see their trades to be deal in terms of USD or in terms of EUR. But in general, most broker will quote EUR USD. But if you have a chart, you can always flip the chart. So that's why they have some people they have like they prefer to see USD EUR instead of EUR USD. It's a personal preference. Because some people, let's say, when they buy a currency, so you're buying the one on the left. So if you see the chart going up, means you're making money. So sometimes, let's say for that case, some people they buying USD, selling EUR. So they want to see a USD EUR chart. So they want to see the chart go up. So it's a personal preference. In the end, the chart should be the same in inverse. Yeah. Okay, next. So for macro news in FX, so macro news comes in many shapes and form. So of course, the macro news, some are pre-announced. That means they already tell you, oh, during this timing, on this day, this timing, I'm gonna release, let's say, the interest rate for the interest rate decision by the Fed, for example, FOMC rate decision. Or Donald Trump tell you, oh, on the first of August, I'm gonna announce some new tariffs. So they really tell you. So you know to look out for it on that day. Then they obviously the one that are emergency news, natural disasters, war. Usually, they won't tell you in advance. Not all the time, at least. So there are new news release, and then there is what we call like a more creeping stuff like debt levels. So debt levels has been, or the government deficit has been in the news, especially for the US, for at least for the past few months. So those are things that affect the currency itself. So of course, news release affects interest rates. Why I highlight it as well, underline it, because interest rates play a very big part in one of the biggest part in terms of determining the value of a currency. Of course, there's interest rate are always linked to inflation. So as you know, the Fed the central bank of US, uses interest rate as the tool to combat inflation. And also, yes, later we'll share a bit more about what the Fed does. Next will be de-dollarization. So ever since the longest of time, ever since US dollar has been the go-to currency or the reserve currency of the world, there has been a slow but steady process of de-dollarization. That means trying to divert. So different central banks are trying to diversify their reserves to rely less on the US dollar. Mainly because due to US weaponizing the US dollar, especially the one of the most recent examples would be against Russia. So when Russia invade Ukraine, the US froze Russia's US dollar assets and also barred them from using US dollar banking systems. Because of this, even US allies are also worried that in the event that in the future they are no longer friends with the US or no longer on that friendly terms, US might freeze their US dollar assets. So because of this, there have been a trend of central banks to lower their proportion of US dollar uh, reserves and buying into other currencies like renminbi, the euro, and so on, and also gold. So because of this, of course, this put pressure on the US dollar and devalue it a bit as well. So next, of course, GDP. So if a country is doing well in GDP, generally their currency are more in demand. Then, of course, CPI is inflation, same as PPI. Jobless claim. So this one is more talking about employment. So later, when we talk about Fed, yeah, this will come into play and more lah. So different country got different focus. So like Australia, they tend to be more correlated, or the Aussie dollar can be more correlated with iron ore price, or should we say commodity prices, because they are one of the biggest commodity exporter. So if the commodity prices are high, generally the demand for Aussie dollar will be more lah. But of course, if the prime example would be during the rise of during the 2013 around that era where the China has been buying a lot of iron ore from Australia, and Australia currency actually went very high. Against Sing, it was like one Aussie dollar was 1.1 to 1.1 something Sing. Now one Sing is worth more than one Aussie dollar. So across time, due to demands and demand and supply of commodities, currencies can fluctuate quite a bit. So okay, so first thing, tariffs. So how does tariff announcement affect FX? So as we know, on 2nd April, or what Trump like to say, Liberation Day, Trump came along with his big board of tariffs that he want to charge his trading partners from China to Asian countries, basically anyone that trades with US, almost. So tariffs, he imposed tariffs on major trading partners. This come as quite a bit of a shock to back then. It was came with like like people didn't see this coming, at least not to this level. People knew tariffs were coming, but they didn't know that it was so high, so fast. So it will be applied on 5th of April, global 10%. Then on 9th of April was everything else. Because of this, the markets actually went down. The US dollar against yen, against euro went down. People start to be like, why is the US punishing its closest allies? So, because of this, people start to lose a bit of faith in the US dollar, as US, the new leadership of Donald Trump has been, using their position to bully his trading partners. So, US tariffs both of its trading partners. So, because of this tariff, US will actually buy less foreign goods. That means less US dollar is being converted into foreign goods. Yes. So US dollar, in theory, if this is just a one-off thing, will be US dollar tend to strengthen because if you buy foreign goods, you need to pay higher price. and you need to pay more US dollar. So generally, the imports from other countries will be less if you're US. However, because of tariffs, overall prices in US will increase because US consumers will have less choice. Uh, because normally, let's say, because of a open free market with no tariffs, products from other country can have fair and good competitive grounds to compete with US companies, so that uh, customers have more choice to buy whatever brand that gives the best value for them. But because of inflation, oh no, sorry, because of tariffs, foreign stuff suddenly becomes so much more expensive. So now, uh, some companies will not import those same products anymore. So becomes local US citizens with less choices, and because of high inflation, US dollar will lose more value over time as well. So when we talk about tariffs, it comes as a more it's not a direct benefit or against the US dollar. It's more about how it affects the other components, other macro factors that comes into play. So Trump's tariffs, after he imposed, he straight away went to pause for 30 days, 90 days. So a new trend had come out called taco or Trump always chicken out. So because of this, the markets, if this was to happen again, the markets will not take his word so seriously anymore. Because if he has chicken out once, or he has stepped back and extended the deadline once, he can extend it again. Then people won't take his word so seriously, lah. And one more thing is tariffs get very sticky. So before Trump's first term, he has imposed some tariffs on China. So uh, but he lost the next election, so Biden came over. So when Biden took over, he had the option to remove tariffs on China. Or but he didn't because some businesses have already in US already set up their factory or what because of the tariffs. So if you are a politician and then you want to remove this tariff, the businesses will 100% complain. So even though Biden might want to remove the tariff, but it's politically suicide to do so because a lot of these businesses who propped up because of the tariff now become non-competitive, you remove. So it becomes very sticky. So it becomes like unless there's something to gain, or else tariffs usually are here to stick for longer term. Even throughout history, there are some tariffs that are set 20, 30, 50 years ago, they are still around, which is quite crazy. So debt levels. Next, we're talking about debt levels. So debt levels are okay. So when we talk about US debt, currently US about $36.6 trillion. So that number is so huge that it's very hard to put into perspective. So what happens is we usually use it. So we don't know whether 36.6 trillion is like very, very excessive or it's okay. So we usually use what we call GDP or debt to GDP. So how much national debt against how much they produce in a year. So currently they're sitting about 123% debt to GDP, which is usually economists say is near the critical level. So if they reach 140, it's extremely bad. That means people will start to lose confidence in US ability to service their debt. Because even for now, their their currency, I mean their debt interest is more than so the interest they pay on the debts are more than the defense budget and other budget combined. So they're paying a lot of money every year. A lot of taxpayers' money is going into servicing their debt. So it's reaching levels that are quite crazy, lah. And one of the reasons is also because their interest rates are relatively high compared to the other countries. So then next is what we call the big beautiful bill that Donald Trump has been talking about and want to push through. Actually, Big Beautiful Bill will even increase the US debt from estimate of 3.3 trillion to 5 trillion in the next 10 years. So, because of this, the a lot of people have been pricing in it. Even the bond markets have been reacting because people see, wow, US have so much debt, but they are still increasing more debt, and their bill, even though Trump's idea is to front load all the benefits. So all the good stuff, right? Oh, during his term. Then all the bad stuff, right? Oh, 2028 expire. Or all the good stuff 2028 expire. So the next person have to go and foot the bill. So that's why US, a lot of people have starting to lose a bit of the confidence. We can see it in the bond, long dated bond market. Especially their yields has been spiking up. The 10-year government bond yields has been spiking up. So inflation interest rates affecting FX. So in July 15, the US inflation rate actually came in above expectations. So they came in 2.7%, which is higher than what they expect of 2.6. So the Federal Reserve usually monitors the inflation very closely because they have a what we call the dual mandate. So uh, the Federal Reserve only cares about two things. One is the inflation, and second one is employment. So if either or is in critical condition, be it very high or very low, they will do something by adjusting their interest rates to influence the markets to stimulate or cool down. So of course, if the inflation is hot, they tend to keep interest rate higher for longer. But because of the higher interest rate, the the US government debt actually costs more because of the high interest rate. So it's a shorter term, even the longer term curve has been correlated with the short term interest rates. Because of that, the Donald Trump has been putting pressure on Fed to lower interest rate as fast as possible. So, it's a very sort of a dancing of the both the Fed and the president. So Donald Trump wants lower interest rate because it looks good. It's a stimulation thing, and but it's inflationary. But Jerome Powell, because central banks are generally independent, doesn't need to report to the president. So all he only can be fired if he cannot manage inflation or employment. That's it. So interest rate are very sensitive in FX because of the carry trade. And it is a cost or benefit to holding FX. So, and US being the reserve currency, generally it will set the basis for other countries. But most country around the world has the interest rate has been dropping, while US has been maintaining at about 4.5, which is relatively high compared to other countries. So here we can see that during the March 2022, Fed has been increasing interest rates from 25 basis point to 50 to even 75 basis points. That was during the time when they try and fight inflation. So during that time, the interest rate went from 0.25%, which is close to zero, all the way to 5.25. So during that time, the US dollar JPY actually went up 23.6%. So if you were to buy during then, wow, you have both made money on the swap points and also the capital gain. So now we are looking forward. So what's the next big thing that's going to happen? So of course, when we talk about tariffs, it will be 1st of August. 1st of August are very exciting. A lot of things going on. So 1st of August will be the second round of potential tariffs. So he has been announcing, he made it very public that he's been sending letters to the different embassy or different presidents of different countries demanding, saying that, oh, if you don't do anything, no deal, right? This is the tariff rate. So it's quite public, so people know. But we a lot of analysts and also market participants are starting to think whether price in whether so not pricing fully because people understand that even if Trump go along with the tariffs, there is a high chance. So far, it's like almost 100% time that he's going to chicken out or he's going to delay it. He's going to postpone it. He's going to just so his whole idea of tariffing crazy amounts will most likely be a way for a short time just to spook the other side to come to the table with a deal lah. So that is the number one thing. Number two is the FOMC meeting, Fed FOMC meeting, which we have a couple of slides later. Then third will be the Bank of Japan interest rate decision. So on 31st July, they have a the usual lah. So Fed, FOMC, then Japan also have their own. So they have one on the end of July. So that is also very important because Japanese yen is used a lot for carry trades. So if the yen decide to increase interest rates to combat inflation, then that will be a big shock to the whole FX system, the unwinding of some carry trades. Then of course there's other macro data like BRICS, like the war and so on. So 1st August, Trump is actually putting tariffs or plans to lah. Who knows about him? He's a little bit random at times. So he proposed the following 30% tariff on EU and Mexico, 35% on Canada, 25% on Japan, Korea, South Korea, Malaysia. So 25% on his closest allies in Asia, trading partners where he has military bases. Then obviously when you used to have 0% and suddenly US come to you with 25%, you're not happy. Nobody's happy. So because of this, most of them are starting to look elsewhere to trade, because they realize, if US is any moment can pull stance and and tariff you, then obviously for long-term viability, you might want to diversify your exports to other country and not be so reliant on US. So a lot of them have started to make deals, be it joining BRICS or making deals with other neighboring countries. So he also proposed to do uh, tariffs on like 50% on copper, up to 200% on pharmaceuticals, and even potentially have stuff, semiconductor tariffs. So usually the industry one makes more sense because he's trying to protect those certain industries. But the whole country one just seems like a bit too all-rounded lah. So for the 29th to 30th FOMC meeting, currently the markets are pricing in a 50% chance for a September cut. So for July, no cut, but the Fed, some of the uh, Federal Reserve chairs have been speaking out saying that they might vote to also cut interest rate in July. So and also obviously the Jerome Donald Trump has been sort of pushing the Fed to lower interest rates. So we have to see what they say. And even for September, it's a 50-50 chance. Currently, markets are pricing in. So Jerome Powell mentions during his speech about tariff risk being uncertainty, and he will only lower when the data shows are in pointing in the correct direction. So with employment data being strong, actually the markets are 50-50, like you say, like flipping a coin. So in conclusion, today we covered how to read FX, the feature FX, how to pick a pair, macro news, and how does it affect FX, macro news like tariff, Donald Trump's, taco, interest rate environment from the Fed, the debt, about the big beautiful bill, inflation, and then we also mentioned a little bit about de-dollarization and how it's slowly shifting. Because de-dollarization usually takes across a lot of years, unless there's a big nexus event like a war, then obviously that speeds up things. And obviously with Donald Trump doing his stunts, it speeds up but it still takes time. Then what to look forward for as well. Okay, so now this is our current promo. So if after this webinar, you want to take a shot in trading FX or trying to trade FX, we have a promo for you. So you can receive up to $50 in cash credits. So remember, FX has no commissions, no finance charge, but there are swap points and also spreads. So when you trade with us, there is no commissions. So there's no harm trying lah. So if you try, not your thing, okay. But now if you try to trade FX with us, if you trade 21 lots, which is not a lot lah. So you can trade qualifying trade every day, maximum of 4 lots. Then for each lot of FX that you trade, you need to hold minimum of 1 minute. So if you trade 20 lots with us within our promotion period, which is until 30th September, you got a lot of time, then you'll get $30. Then if you trade 21 lots and above, then you get $50. So now, if you never tried before, right, you should give it a shot to try. Try our FX, try the different pairs that you do research on or that you're comfortable with. Then you also get rewards, which is great. So if you ever wanted to try, I think now is a very good time to try. You can both do it on our Pwns platform and also on our MetaTrader 5 platform. So both platform okay. Whichever your preference. To me, I think MetaTrader 5 platform is best for trading. Okay, now will be the Q&A. And in the event you do not have an account, you can also open an account using the link on the QR code or the link as well. So you can ask any questions now regarding the webinar. Then if you have a question, you can also email us cfd@phillip.com.sg. So we'll reply you as soon as possible. And also any CFD related questions are also welcome. So just to share a little bit, so FX, I'll say the strength of the US dollar against basket of foreign currency is very correlated with uh, gold price because gold is usually denominated in US dollar. So if US dollar were to depreciate, then usually gold will go up. Okay, let's see whether there's any more questions. Okay, I see a question asking about US dollar and Hong Kong dollar. So US dollar and Hong Kong dollar are have a very unique thing that is somewhat what we call a peg. That means the Hong Kong central bank has to maintain the Hong Kong dollar, US dollar currency within a certain bound. So if I'm not wrong, it's 7.75 to 7.95, something like that. So basically, they will maintain it so that it will fluctuate only within that band. So when it's reaching the lower bound or upper bound of the band, the central bank will come up and sell the currency sell the Hong Kong dollar currency to buy US dollar, or use its foreign reserve of US dollar to go and buy the Hong Kong dollar to maintain the the rate. So that's how peg or currency pegs are being maintained. It takes a lot of foreign reserves, because if speculators feel that you cannot maintain the peg, they can attack it by forcefully selling your currency. Then if you do not have foreign reserve to defend, then it will you they can break the peg. Okay, I have a question. Is it easy to use machine to trade and make money from it? How reliable are these machines? Okay, when you talk about machines, I believe you're talking about algo trading. So for algo trading, or for any trading strategy, it may not work all the time. Trading strategies are like a process where in certain situations, this trading strategy will work. Even though you backtest, it may not 100% work. So it's always need to adapt. So machines are only as good as what you feed it. So if you feed it a good strategy, maybe you can make money and over a long period of time. But you always need to adapt and change, because as you know, you can never predict all the behaviors of the market. Because you know, when we talk about black swan events or events that don't happen often, but when they happen, it kind of wipe people out. Uh, Nobody can really prepare for it, but you need to know what to do when it happens, and make sure you have proper risk management. So I see a lot of trading strategy where how it works is this: they'll make money, 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 make a bit, make a bit, make a bit, make a bit, and then suddenly one big loss, then wipe out the whole account. Usually that's the behavior we see, especially on newer people trying out algo trading. So they'll have a strategy, they back test, it works, but then they never write in a proper risk management. So after a while, it will make money a bit, and suddenly one big loss. So like a black swan event, an event that suddenly the algo couldn't detect to stop trading, then it will just keep loop, and then it will just die. Yeah. So there are some things that we see. Then I would say algo trading or using computer to trade removes a lot of the emotion, because from clients, usually even me included, we get emotional when we are losing money. Wow, we feel very painful, or we don't want to close the position, because once you close the losing position, it makes it real. We always feel that when it's unrealized, it's not real yet, so it can go back up. But if your trading strategy requires you to close, like your stop loss is there, you're supposed to close, then you keep moving it, right? Then you're not doing the trading strategy, then you are more prone to lose money compared to you're more disciplined. If it hits, you just cut loss, try again. Then of course, more discipline will be better. So machines generally remove more of the emotions out of it. Yep. Okay, it's 7:31. If you have any last questions, if not, I think we can end it for today. Okay, one last question. Let's see. How does one determine the strength of US dollar as so much uncertainty now? Like trade in USD Euro and USD JPY. Okay, good question. So first thing first, uh, let's talk about USD JPY. I'm a little bit more familiar with that. So we have to compare the two economies. So of course, US recently they are doing all right, but data starting to show that the tariffs are starting to impact, especially the inflation of US. So obviously, more data has to come to assert the trend. But recently, but Japan also not doing so well. So Japanese, if you know their prime minister, their leading party, they're politically not as stable as well. So there's also weakness. So when two countries are showing weakness, potential weakness, generally, my advice is to, if you want to trade around the news, especially when they're going to release, but be careful lah. Make sure that your position sizing is correct, and that you have set your stop loss take profit And doing more short-term trades will be better than long-term trades, especially during times when it's very uncertain. So I rather use more technical analysis because fundamental analysis generally takes time and usually there's more data lah. Especially now when both sides are a big question mark, then I will advise is to do more technical analysis and trade more short term. Try not to hold positions for more than a few days or even a week. Try to take short positions, trade off momentum instead of especially when there's not much fundamental play involved, then generally I my advice is to trade off technicals. And for FX, they are perfect to do scalp trading, doing more short-term intraday trades. There are a lot of opportunities there. Yep. Okay. Now that I answered the last question. Okay, thank you everyone for tuning in. Then if you have any more questions, feel free to email us. I will reply them personally as well. Always, thank you very much, everyone, and hope everyone have a good evening.